Hello and welcome to today's video where we'll be discussing money services businesses and the financial crime risks that they face. We'll be explaining what MSBs are, the type of services that they provide and why they are an attractive target for criminals and money launderers. By the end of this video you will have a better understanding of the challenges that are faced by MSBs and how they can mitigate risks. So let's get started with our topic, money service businesses explained. As we dive deeper into our discussion of money services businesses explained, it's essential to understand that there are different types of MSBs, each with unique sets of services and clientele. A money service business, or an MSB, is a type of financial institution that offers various financial services such as currency exchange, remittance services, and check cashing, just to mention some. MSBs today still play a significant role in the financial industry, particularly for those that are living in areas on this planet with limited access to traditional banking services. MSBs face several financial crime risks due to the nature of their services. The high volume of cash transactions, the potential anonymity of customers, and the use of agents or third parties can make MSBs an attractive target for money launderers and other criminals. As we explore the world of money service businesses explained, it's crucial for MSBs to be aware of these risks and implement appropriate measures to protect their business and customers. Regulatory authorities worldwide have recognized the risks associated with MSBs, which is why they impose strict AML and CFT obligations and licensing requirements on this type of businesses. In the United States, for example, MSBs are regulated by the Financial Crime Enforcement Network, which is also known as FinCEN, a bureau of the U.S. Department of Treasury. FinCEN requires MSB to register and comply with various AML-CFT regulations, including the Bank Secrecy Act, which you probably know as the BSA. You can find more information about the FinCEN requirements for MSBs on their official website, and of course I will leave you a link to this in the video description. In the European Union, MSBs are subject to the Anti-Money Laundering Directive, the AMLD, which establishes a common regulatory framework for combating money laundering and terrorist financing across EU member states. The latest iteration of the directive, the AMLD6, didn't expand more on MSB regulatory requirements. However, those were already included under AMLD5, the previous version, with specific provision targeting MSBs and virtual currency providers. So I will leave you a link to the AMLD5 also in the video description, so you can refer to this comprehensive guide by the European Union. I only mentioned US and the EU so far, but of course there could be more regulatory requirements to follow based on where you are in the world. So compliance with these regulations is essential to protect the business and its customers from financial crime, as well as to maintain the integrity that is required within the financial system. Next, risk assessment and customer due diligence for MSB. But before we dive into that, please take a moment to subscribe to FinCrime Agent for the latest insight on financial crime compliance and anti-money laundering. Your support helps the channel grow and allowing me to continue providing valuable content for students and industry professionals like you. And if you find this video helpful, feel free to hit the like button and share it with others. Thank you. One of the essential aspects of compliance for MSBs is the implementation of risk-based approach to anti-money laundering and counter-terrorist financing. As we see across all the financial services firms, this includes conducting thorough risk assessment and customer due diligence processes such as Know Your Customer and enhanced due diligence procedures. Ongoing monitoring and risk assessments are also crucial to ensure that MSBs can detect and prevent financial crime effectively. An essential part of preventing financial crime in the MSB sector is by implementing also robust transaction monitoring systems. These systems can help detect suspicious activity and identify potential money laundering or terrorist financing patterns. Additionally, MSB have reporting obligations such as filing suspicious activity reports, also known as SARs, to help authorities combat financial crime. Training and awareness. Lastly, staff training and awareness are vital in preventing financial crime. MSBs should invest in training programs to ensure that their employees understand the risk associated with their services and are well equipped to identify and report suspicious activities. Maintaining a culture of compliance within the organization is also essential to mitigate risks in the MSB sector. So, as you can see, those regulatory requirements remain largely aligned with the requirements applicable to other financial institutions. In conclusion, as we wrap up our discussion on money service businesses explained, it's essential to understand the financial crime risks that money service businesses face and the importance of proactive measures to mitigate those risks. By implementing robust compliance programs and fostering a culture of awareness, MSBs can protect their business and customers from financial crime. If you wish to support my FinCrime Agent project, my Patreon link is in the video description, or you can simply send a super thanks directly from this YouTube video. So that's all for today's video. I hope you have learned something new, and you will find below links to my research on money service businesses explained. Thank you all for watching. I hope you have enjoyed today's video, and until next time, see you soon.